You know what I've noticed? Every time Trump announces tariffs, the same thing happens. Markets panic, headlines scream chaos, and it just happened again. Right after the Supreme Court ruling, Trump announced a new wave of tariffs. And if you're watching the news, probably feels like complete chaos. But here's what I realized after watching this play out from China to Greenland. It's not chaos, it's a system. And once you see the pattern, you can't unsee it. More importantly, you can actually position yourself ahead of it instead of getting caught in the panic. So in this video, I'm breaking down the exact 5-step cycle Trump uses every single time. And I'm going to show you how this latest Supreme Court announcement follows the exact same playbook he used with Greenland just weeks ago. I achieved financial independence at 40, and I help people build investment portfolios to support their personal resets and reinventions. Now let's get into it. All right, so step 1 is what I call the weekend drop. And this is where it all starts. Trump announces tariffs late Friday or over the weekend. Every single time. Now, why does this matter? Because the markets are closed. Think about it. If he dropped this news on a Tuesday at 10 a.m., the stock market would immediately react. Algorithms would start selling, panic would spread in real time. It would be messy, but when he does it on a weekend, the news has time to settle. People can process it. The initial shock wears off before the opening bell on Monday. It's actually brilliant if you think about it from a negotiation standpoint. He's controlling the narrative before the market can overreact. And look at what just happened. Right after the Supreme Court ruling, Trump waited until the weekend to announce the new tariffs. Not Monday morning, not Wednesday afternoon, Friday afternoon, basically right before the weekend. By the time markets opened, the news cycle had already moved through the shock phase. Analysts had time to write their takes. And the market reaction was way more measured than it would have been if he dropped it midweek. Now, this isn't new. Remember Greenland? Same exact move. He announced tariffs on Denmark and other Scandinavian countries late Friday afternoon. By Monday, panic had already peaked and started to fade. Here's what you need to understand as an investor. The weekend drop is your signal that something, but it's not time to panic yet. This is the setup phase. The real action happens in the next steps. Okay, so step 2 is the escalation window. And this is where most people get confused because Trump never announces the final number first. He'll say something like, we're starting with 10% tariffs now. But if they don't negotiate, it goes to 15, 20, or 25% in 30 days. See what he just did there? He created a ticking clock. This is pure negotiation psychology. He's giving the other side a window to act, and that window creates urgency. Now, why does this work? Because it puts pressure on the other side without him having to do anything. The clock is ticking. They have to respond. And here's the thing. Most of the time, the higher number never actually happens. It's just leverage. Look at the Supreme Court tariff announcement. He didn't just say, here are the tariffs, deal with it. He structured it with phases. Start date here, escalation date there. It's a ladder, not a wall. That's the escalation window. He's not going straight to the nuclear option. He's giving them a chance to negotiate while keeping the pressure on. And we saw this exact same thing with Greenland. Trump announced the February 1st tariffs, but he also said if Denmark didn't come to the table, the tariffs would increase significantly by mid-February. Same playbook, different country, different issue, same psychology. Now, as an investor, this is where you need to pay attention. Because during the escalation window, you'll see a lot of volatility. But it's not real volatility, it's manufactured pressure. If you understand that, you won't make emotional decisions during this phase. You'll wait and watch for step 3. All right, step 3 is the market knee-jerk. And this is the chaos phase. As soon as the tariffs are announced and the escalation window is set, the market reacts. Funds start selling. Algorithms kick in. Fear spreads. But here's what you need to know. This is the peak pressure moment. This is when the other party feels the most pain. Their currency might drop, their stock market might tank, and suddenly they're way more willing to negotiate. Trump knows this. He's counting on it. After the Supreme Court tariff announcement, we saw exactly this. Futures dropped, currency markets reacted, headlines screamed about trade wars and economic collapse. But if you've been paying attention to the pattern, you know this is temporary. Let me give you another example. When Trump announced tariffs on China back in 2018, the Shanghai Composite dropped 25% in a matter of months. That pressure forced China to come to the negotiating table. Now here's the part where most people miss. The market knee-jerk is temporary. If you panic and sell during this phase, you're locking in losses. But if you understand that this is part of the cycle, you can actually position yourself to benefit when things stabilize. Because here's what happens next. Just when everyone is at peak panic, the narrative starts to shift. And that brings us to step 4. Step 4 is narrative control. And this is where the magic happens. Because just when the market is at peak panic, the messaging changes. Suddenly, you'll see headlines like, "Talks are constructive," or "Tariffs may be temporary." Another thing, both sides are working toward a deal. This isn't an accident. This is deliberate narrative management. What's happening behind the scenes is that the other party is feeling pressure from step 3. They're coming to the table, and Trump's team is leaking just enough positive news to calm the markets without giving away their leverage. It's like a pressure release valve. The market gets just enough hope to stop the bleeding, but the tariffs are still in place, so the pressure on the other country remains. Now, we're probably in this phase right now with the Supreme Court tariffs. Watch for it. You'll start seeing reports that officials are in discussions, or the administration is open to adjustments. That's narrative control. The market stabilizes, investors stop panicking, but the negotiation is still happening behind closed doors. Let me show you how this played out with Greenland. After the initial market reaction, we started seeing reports that Denmark was open to discussions. Then, a few days later, officials said the tariffs were under review. Same exact pattern, different situation, same psychology. Now, as an investor, this is where you need to be strategic, because this is the phase where opportunities start to appear. If you sold during the market knee-jerk, you missed the bottom. But if you held or even bought during the panic, you're now seeing your positions recover. And that brings us to the final step. Step 5 is resolution. And this is where the cycle completes. A deal is reached. The tariffs are reduced or removed, and everyone moves on. But here's the twist. The deal almost always favors Trump's original goal. He might not get 100% of what he wanted, but he gets enough to claim victory, and the other party gets to save face by saying they negotiated. It's a win-win on the surface. But if you look closely, Trump usually gets the better end of the deal. Let me give you an example. With China, Trump wanted them to buy more American goods and stop intellectual property theft. After months of tariffs and negotiations, China agreed to buy $200 billion more in U.S. goods over 2 years. Did he get everything? No. But he got a lot. Now with Greenland, we saw the same thing. After weeks of pressure, Denmark came to the table. They made concessions on NATO funding and Arctic access, and Trump reduced the tariffs. That's the resolution phase. The pressure is off, the market stabilizes, and life goes on. Now, we haven't reached resolution yet with the tariffs after the Supreme Court announcement. But if history is any guide, we'll see some kind of agreement in the next few weeks where the other side makes concessions and Trump adjusts or removes the tariffs. That's how this always ends. But Here's what's different about 2026. The stakes are higher than they've ever been. Okay, so we've covered the 5-step cycle, but there's a sixth piece I need to talk about, and this is specific to 2026. Because here's the thing, the playbook is the same, but it's starting to lose its power. In the past, Trump used tariffs to negotiate trade deals with other countries. It was about economics. It was about jobs. It was about balancing the trade deficit. And it worked because it caught everyone off guard. China didn't see it coming in 2018. The element of surprise was part of the leverage. When you shock the system, you get maximum pressure and faster concessions. But here's what's happening now. Everyone knows the playbook. Markets have seen this cycle play out multiple times. Investors know to expect the weekend drop. Traders know the market knee-jerk is temporary. And most importantly, the countries on the other side of these tariffs, they've figured out the pattern too. Let me show you what I mean. With Greenland, Denmark didn't panic the way China did back in 2018. They knew the escalation window was just a negotiation tactic. They knew the tariffs would probably be temporary. So they didn't rush to the table with major concessions. And that's the problem Trump is facing now. The leverage is deteriorating. When you use the same strategy over and over, it loses its shock value. It's like crying wolf. The first time, everyone runs. The second time, people are cautious. By the fifth time, people barely look up. And here's where it gets really interesting for us as investors. Because if the strategy is losing effectiveness, that changes everything about how we should position ourselves. In 2018, when Trump announced China tariffs, the market dropped hard and then recovered when a deal was reached. And that created a clear buying opportunity during the panic. But now, markets are getting smarter. They're not panicking as hard during step 3 because they know step 4 is coming. And that means the recovery isn't as dramatic. Look at what happened with the tariff announcement after the Supreme Court ruling. Yes, futures dropped, but not as much as they would have had 3 years ago. And the recovery, it's been slower, a lot choppier, and less certain. That tells me something important. The market is pricing in the possibility that this time the cycle might not complete. Because here's the other side of this. If countries know the playbook, they can call Trump's bluff. They can wait out the escalation window. They can refuse to negotiate, knowing that Trump might have to come back down, knowing that Trump might have to back down to avoid real economic damage. And if that happens, if we get to the end of the escalation window and there's no deal, then we're in uncharted territory. And that's the 2026 twist. It's not just the stakes are higher. It's that the strategy itself might be breaking down. Now, let me be clear. I'm not saying Trump's tariffs won't work at all. I'm saying the effectiveness is declining. And as an investor, you need to be aware of that. Because if we don't get the clean resolution we've seen in the past, that creates a different kind of risk. It means tariffs might stay in place longer than expected. It means supply chains could be disrupted for real, not just as a negotiation tactic. It means inflation could tick up. It means corporate earnings could take a hit. And not to mention, the Supreme Court is supposed to be an independent body. So how can you negotiate with the Supreme Court? And here's the part that keeps me up at night. The market might not have fully priced this in yet. Right now, most investors are still operating under the assumption that this will play out like it always has. Weekend drop, escalation window, market knee-jerk, narrative control, resolution, done. But what if it doesn't? What if we're in the market knee-jerk phase and there's no narrative control coming? What if countries have decided they're not playing this game anymore? That's the question you need to be asking yourself right now. Now, I'm not saying panic. I'm saying to be strategic. Watch for the signals. If we hit the end of the escalation window and there's no movement, That's your sign that something has changed. And if that happens, you need to adjust your positioning accordingly. All right, so let's recap. Trump's tariff strategy follows his 5-step cycle every single time. Step 1, the weekend drop. He announces tariffs when markets are closed to control the initial reaction. Step 2, the escalation window. He creates a ticking clock to force the other side to negotiate. Step 3, the market knee jerk. The market panics, which puts maximum pressure on the other side. Step 4, narrative control. Positive messaging starts to leak, calming the markets while keeping the pressure on. Step 5, resolution. A deal is reached, usually in Trump's favor, or at least that's what he thinks. But here's the 2026 twist. The cycle is losing its power. Markets have seen this before. Countries have seen this before. And the leverage that made this strategy work in the past is slowly deteriorating. That doesn't mean the tariffs won't have an impact. It means the impact might be different than what we've seen before. And as investors or traders, we need to be prepared for that. So here's my question for you. Do you think countries will keep playing along with this cycle? Or are we about to see someone call the bluff? Drop your thoughts in the comments. I'd love to hear what you think. And if you found this breakdown helpful, make sure you subscribe, because I'm going to be tracking how this plays out in real time and what it means for your portfolio. Thanks for watching. I'll see you in the next one.